बाप रे बाप. Anyway, that is for another day.
किस बंदे को मीट करके आया किशोर? किस बंदे को मीट करके आया आप?
He is a friend of my batchmate.
अच्छा.
Now my batchmate has become a yogi. He is in the Himalayas. Okay.
Wow.
है मेरा है अलभ्य सिंह. ओ ये जानता. अच्छा अपना वो पटेल में गया था अलभ्य.
Yeah, I know him. I knew him.
Alabha is an amazing character. Who is physics. So Alabha has actually mastered Bhagavad Gita in his third year, just 1 or 2 months.
Master. What does mastered mean? Did he memorize?
Mastering means, okay, at that time, by his own words, like he just mugged up the entire thing.
Mugged up the entire thing. Okay.
Mugged up the. But then, okay, as he grew up, he, his realizations are all there. So Alabha se abhi tak hum meet nahi kiya. I haven't met him after Kharagpur. We just talked. So he had a friend. He was going to Sainik school. So he had a friend, school friend, whom I met. He is in Surat for 30 years. So and his son is studying. This friend's Anand naam hai uska. So his son is 60%. क्या बोलते हैं उसको? Quadriplegic.
Yeah, quadriplegic. Yeah.
60%. So.
अच्छा.
But his mind is so sharp. He cracked NEET. So,
nice.
Yeah. So he is now in second year doing medical in Bhopal, near Bhopal somewhere. Okay.
Nice.
So
nice.
And he has twins. Okay, one son and one daughter. Now daughter is fine. Daughter is doing engineering, design engineering in Bhopal, and son is doing somewhere like 2 hours from there. Bhopal, Indore, or ek jagah hai. Anyway, so yeah, so all these amazing stories. Once if I hear, तो हम सोचते हैं साला हम तो कुछ नहीं किया.
Of course. When you compare yourself, I remember when I was in Kharagpur in my first year, I used to wonder about Boris Becker, I used to be like, "Hey, Boris Becker, साला 17 साल में क्या-क्या तीर मार दिया."
There is a similarity there. Me too. Same thing. वो Boris Becker का heart rate मालूम है? 32. His heartbeat was 32. So
wow.
Yeah. So Boris, yeah, me also Boris Becker.
Hey, who is SS?
एक minute. SS मतलब?
There's one guy who joined who's SS. I'm just
Sanjay
Sinha.
Sinha.
Not my son.
Yeah.
Acha, hi Sanjay.
Hello. Hi. Sorry, joined a bit late.
No problem. अभी तो start भी नहीं किया.
अच्छा, बीच में किसको टोपो को देखा था ना? टोपो है क्या?
Yeah, Topo came and went. Yeah, he's back.
Topo is yeah. Topo has an unstable Wi-Fi connection. क्या कर रहा है अमेरिका?
All right.
No, I'm back. No, it's actually raining and storm. So
yeah.
So how many people are there, Pratik?
About 5-6. That's good enough. Yeah. So stressless stock trading method, that's what we are going to talk about. I'm just going to share my ideas. It's in a way, it's a good thing that we have a small crowd so that, anybody who wants to ask questions, please feel free. We can stop. We have all the time in the world. So wherever you want to stop, you're free to stop. So what causes stress in investing in stocks? This is just my collection of thoughts. If you have something new to add to the list, that will be even better. First is daily unpredictable up and down fluctuations in price, right? Second is need to follow news to get any sense of predicting the market direction. So basically, you're continuously expected, like, your advisor will tell you, you have to follow the news, you have to understand what is going on. I mean, you say, what the hell, man? All I want to do is make money. I don't want to follow the news, right? Sure. need to read stock price and volume charts to figure out market direction. So the first part is, so the second point was basically fundamental analysis, and then they start talking about technical analysis. Okay, now you have to look at charts, you have to understand, patterns in the chart, you have to look at Bollinger Bands, you have to look at, you have to look at moving averages, you have to look at candlesticks, all kinds of strange mathematical concepts, the pseudo mathematical concepts I call them. So need to figure out price points for buying and selling. So even if you understand all these things, you still have to figure out what price to buy at, what price to sell at, right? So it makes you scratch your head, what, like, because every price somebody is buying or selling. So why do you have to select a price? It's all a big mystery. It was always a big mystery to me. So then feeling like gains today can disappear tomorrow. Like even if you're making gains today, you say, oh my God, I might get up in the morning, all the gains I made can disappear, right? So that itself adds to the stress. All the money that you made could disappear overnight. So market keeps dropping even after you think it has hit the bottom, right? So all your friends, everybody will tell you, okay, now the market has dropped, it has hit the bottom, it is not going to drop any further. And next day you get up, it is dropped even further, right? So that itself, that is the main cause of stress. You can never be sure how low it is going to go. No matter how much people tell you that, okay, abhi itna ho gaya, isse zyada nahi hoga, next day you find ki fir se gir gaya. Then you have invested. Okay, now I'm having a little, this thing is, 1 second guys, I'm just having an issue with your screen sharing is paused. Why is it paused? I click the link. Why is it paused here?
Why don't you stop sharing and then restart sharing?
Let me start again. Yeah, let me share again. Share. Okay. Your screen share. Okay. So now what I'm struggling with.
Yeah, we can see your screen. Yeah.
Okay, cool. So I mean, the problem is I can't see parts of it because this whole bar is hiding part of the screen. So I just want to shift this bar. Okay, now I got it. Okay. So you have invested all your cash and the market is still dropping, right? So you say, okay, it hit the bottom. I put in all my cash and the market is still dropping. So that is the biggest stress point, that, after you feel that, okay, I put in all my cash and the market is still dropping, and now you can do nothing else but sell. That's the only action you can take. So fear of missing out if you don't participate in the market, right? I mean, so that itself is stressful. If you don't participate, then, people are saying, hey man, the market is going up. Microsoft did another release. Apple did something new. So all that further increases the stress. If you don't participate, even that is stressful. So anything else anybody can think about? Anything else that causes stress that anybody can think of?
So Pratik, one fundamental this thing down. Are you dealing with stress or trading or stress in investing? Because I believe both are different. When, for example, my experience is whenever I invest, which means I know that I will have at least 2 or 3 year horizon, I've always made money. But when I say it's stress, when I say trading, which is like taking positions on index and all those stuff, I almost always lose money, correct? So yours is about stress in trading or stress in investing?
See, let us just clarify, what does investing mean? Investing means I gave money to the business owner and he used the money to build the business. That's called investing, right? Whatever else you do besides that is trading. When the stock comes into the market, it is already only open for trading. You are not, whatever money you are putting in the stock is not going to the owner of the business. He has no access to your money. Now you believe that, okay, I am investing, but it becomes investment only when it reaches Elon Musk and he actually waits for your money to come in to buy his next rocket, right? He's not doing that. Whatever you're doing, your only option is trading. Whatever thinking that you are doing that I'm investing, you are not investing, you are trading. The way the market is constructed is that you can buy at any time, you can sell at any time. So it is your choice to say, well, I'm investing, but you are not investing.
Okay, let me clarify. What I meant was investing was basically more a long-term trading, long-term holding this thing, and when I
Right,
say trading, it's more a short-term, like pretty much like a day
right.
trade or a one weekly this thing, current expiry or something like that, monthly expiry. That's what
So
I
the
meant.
thing
Anyway, I
is,
think let's move ahead. Actually,
no, your point is valid. I just want to talk a little bit about your point, right? So suppose you buy a stock, you buy Amazon, right? And you say, okay, for 3 years, I will not look at it. I will just wait and see what happens, right? And every day the news comes out is up $5, it's down $5, it's up $10, it's down $5, right? That itself brings stress. I mean, you might say that, okay, I'm just not looking at the market, but that is by just closing your eyes doesn't mean that the stress is not there, right? By saying that I'm investing, I'm just not going to look at it for 3 years, the stress is still there. The fluctuations are still causing stress. That's why I said daily unpredictable up and down fluctuations, right? Just because you close your eyes doesn't mean that the world does not exist, right? The world still exists, right? So I mean, I'm being a little philosophical, but I just want to be clear about where stress comes from. And just by saying that I'm investing, the stress does not go away. So stressless trading method proposes invest in ETFs or sectors rather than stocks to reduce unpredictability. Okay. So that's the first thing. Just so I usually, so my personal belief is that the day technology stops growing in US, the entire country will close down, right? The entire country survives on technology. So I just invest in technology with this belief that I just look at technology ETFs because I believe that the day technology stops working in US, it's time to move on. It's time to move to a different country, basically. So build a plan to buy and sell beforehand for all price points. So basically, if you build a plan saying, okay, if the price reaches this price, I will do this. If it reaches this price, I'll do this. If you have an entire plan laid out, then it's bound to reduce your stress. Basically, you just make your plan dependent upon the price. What is the price of the stock? And based on that, you decide whether you want to buy or sell, and that's about it. Wow, 11 participants. So at least we have some growing number of participants, right? Okay. Once you have price-based investment strategy, what are the benefits of having a price-based investment? No need to focus on timing, right? Now you've laid out a plan that at this price I'm going to buy or sell, and you're not thinking about whether it is morning or evening or afternoon or beginning of the week or beginning of the month or where the chart is telling you what to do. For every price, you have a plan, basically. No need to follow news. Once you're just focusing just on the price, you have no need to follow the news. And I'll elaborate that a little bit further. Basically, what I mean is that you stop predicting the market. You don't predict the market, you just react to the price. Every time the price rises or hits a particular point, you take an action. You don't try to predict where the price is going to go in the next step. You just react to the current price. So once you do that, there is no need to follow the news. Strategy should be such that your initial investment is like money you spend to buy a cash printing machine, right? So you are allocating some money. Essentially, you should feel like you're buying a cash printing machine, right? You bought this cash printing machine, and the cash printing machine should print money for you that you can take home while keeping the cash machine. So now, basically, you have a cash printing machine. It is generating money, and you can walk away with that money, and you still have the cash printing machine, right? Whether the price of the cash printing machine increases or decreases should be immaterial, right? So suppose you buy for your manufacturing plant, you buy some gadget, some machine, and now the machine is producing money for you. It is generating revenue for you. But whether the price of that machine itself is fluctuating should not bother you because it is generating cash for you that you can keep. And as long as the total cash that you generate is exceeding the total amount of money you spent on buying the machine, the fluctuation in the price of the machine should not matter, right? I mean, you will sell the machine when you are willing to close shop. And most of us, like, who are in that investing mode, think like that, that, okay, when I'm old, when I'm retiring, when I'm closing my shop, and when I'm passing all my money to my kids, then I will think about, selling the stock, right? So you should have a similar mindset about the cash printing machine that you created. The cash printing machine should never run out of cash to invest, right? So so the cash that you basically fed into the machine initially is the cash that is driving the whole process, right? So your account should never run out of cash, because you always need cash to keep buying stocks. So the strategy should be such that the cash printing machine should never run out of cash to keep buying stocks. Make sure that you are automatically buying and selling as the price fluctuates, right? So one of the biggest issues is that market volatility is such a thing that you buy a stock at $50 and now it's at $45. Now you say your mental setup is, until it crosses 50, I'm not going to do anything. So now you are stuck, because until it crosses 50, it is going to, you can't do anything. So you can lose a lot of time because of that. Whereas 6 months will pass, 9 months will pass, the stock is never not crossing 50, and you are seeing it fluctuate, but you're not taking any action because your purchase point is higher than the region in which fluctuations are occurring. Any thoughts, any feedback on whatever I've said?
ये सब अच्छा ही है, आप बताते रहो.
Yeah, I guess the point is everybody's waiting for the meat, right? Show me where the actual meat is. I can understand that, but the reason I'm doing a little bit of preaching here is so that we have the right mindset when I show you the numbers, basically.
Okay.
So the philosophy is not new. It is not like I'm preaching something that nobody else has thought about, right? Because others have also thought about something similar. The closest thing I found was this book, How to Make $1 Million in Stock Market Automatically, right? This guy wrote this book in the 70s. And the only difference is that my approach is different. My math is different, right? So it is the same set of ideas. This book sells for like $7 on Amazon. I think 540 on Amazon. And if somebody wants, I can even send them a soft copy over WhatsApp. So it's a very good read. It's a fun read. Like, if you like reading these kind of books, it has a lot of interesting thoughts about the perspective with which he's developing the things. So it's almost like the first 4 chapters of the book are almost like as if I wrote those chapters, right? I mean, I got to know about this book only about 3 months ago. And but it was very interesting that I came to realize that basically he's talking about the same philosophy, although his math is different. So I just want to share a little. Yeah, go
आप
ahead.
लेट हो गए, वरना आप ही ये किताब लिख सकते थे.
I mean, see, the point is, you always build on top of the shoulders of other people, right? So I'm happy that he has this book there. That way, I don't have to write the book. It's already there. I don't have to justify it. So it actually is better that somebody else wrote the book. So a little story. I just want to share a little story as to why I'm doing this, why I'm sharing all this. So what happened was, in 2019, at that time, I already had some rudimentary idea about what I was trying to do. And there was this company called Online Trading Academy. And they held a seminar. They held a 3-day seminar. And I'm sure, like, others have probably also heard about it and also gotten ads about them. They were holding a 3-day free seminar to teach you their trading method. And I went for the seminar. By the second day, they started pitching their course. Their course was for $50,000, and they started pitching it to me. So they would take me to a separate room, and they would pitch to me. Basically, the room contained about 40 people. Out of that, most of them were retirees that were trying to figure out how to invest their retirement funds to generate an income for them after retirement, right? So you could see, I could feel the stress in the room. It was so strong that these people are stressed out that, oh my God, I've never traded in my life. And now I have to make income for myself. So these guys would take me to a separate room. They would say, well, $50,000, you can learn our program. So, I mean, of course, I was not there to learn anything. I was there to understand what they were trying to do, but I was definitely not there to buy something. So I started negotiating with them. It was an Indian guy. And so it was, you can imagine how what the energy would be in the room. Like there's two Indian guys, they're trying to negotiate. I got him down to $6,000, right? And he said, okay, are you ready to sign the deal? I said, I'm looking for a good deal, right? I was not there to sign anything, right? So I said, I'm looking for a good deal. So this guy goes, man, what are you talking about? I got it down to $6,000. You're still talking about a good deal? So he got up from the room and left. And the CEO of that office walked into the room and he started yelling at me. He was like, what do you think you are? Like, how can I run a business like this if you negotiate it down and you still are not ready to sign? You have to sign. I was like, it's great that you walked into the room. All I want to do is I want to propose that you let me run your class for 3 days for absolutely for free. You don't have to pay me anything. I just want to teach my method to people for absolutely free. And I think I can reduce their stress and provide them with something very interesting. They threw me out of the office. They literally threw me out of the office, right? I mean, so so when I came out of the office, I realized that there is an opportunity. There is an opportunity to actually help people reduce the stress. It is not about making money. It is about how many people all across the world are getting stressed out about trading because of all the vague information we get fed that you have to follow the news, you have to watch the charts, you have to learn about the companies, you have you have to manage your money, you have to figure out where the funds are coming from. And of course, you have to then explain to your friends and family what you're doing. So all that is causes extreme stress. And so I see an opportunity in terms of reducing stress in people's life, and that's my real goal in doing all this, right? So stressless trading method is actually a collection of methods. We will discuss one of such methods, right? So my entire goal of this talk is so that I can give you an insight into what are the key principles of the stressless trading method, so that you can incorporate it in your own style of trading. Or when I come up with an app like which probably will happen sometime next year, you could be excited about using that app, right? So simple scenario to illustrate the method. A stock price fluctuates. So I mean, of course, it might sound like some of the things I'm saying are a little, I'm making too many assumptions, but just hang in there, just walk with me through this process. By the end, it'll all make sense. So let's take a stock where the price fluctuates between 100 and 104, right? You have 100K to invest in the stock. The approach is to buy 10 shares every time the price drops by $1 and sell 10 shares every time the price rises by $1. That is that is that is as simple as strategy, right? Every time the stock drops by $1, you buy 10 shares. Every time the price rises by $1, you sell 10 shares, right? So suppose the price goes from 100 to 99, you buy 10 shares. Goes from 99 to 98, you buy another 10 shares. It goes to 99 back to 99 again, you sell 10 shares. And then it goes to 100 again, you sell another 10 shares. And then it goes to 101, you sell another 10 shares. So all you have to do is monitor the last price and figure out whether it has gained by $1 or dropped by $1. That's as simple as it is, right? If the price drops from $100 all the way to zero, so let's say you bought it at 100 and keeps dropping, goes all the way to zero. By this strategy, you will end up buying 1,000 shares because you'll be buying every time the price drops by $1, and your average purchase price will be $50, right? Because between when you're buying from 100 all the way down to zero, your average purchase price will be $50. Does that make sense? I'm sure that makes sense. All intelligent IITians here, right? So
नहीं वो सब बताने की जरूरत नहीं, लेकिन जो रुपए में इन्वेस्ट करते हैं उनके लिए भी व्हाट इज द इंटरवल? यहाँ $1 इज प्रॉब्ली गुड फॉर
no,
यूएस मार्केट.
I'm not even talking about using $1 or one rupee.
हाँ,
This is just a hypothetical scenario. You can change
अच्छा,
these numbers any way you like. At the end of the whole story, you will understand what I'm trying to say. Don't focus on these numbers right now. I'm just setting up a scenario.
okay.
All these numbers can change, of course, right? So there is no stock that will just fluctuate between 100 and 104. Stocks do all kinds of strange things, right? So everything here is hypothetical right now. I'm just setting up a scenario so that you can understand the message. Don't focus on whether it's dollar or rupee or 1,000 shares or 100 shares. Okay? Just follow the scenario. Just walk with me through the scenario. At the end, we'll try to investigate what we are talking about. Okay? Make
Okay.
sense? Yeah.
हाँ ठीक है.
Okay. Okay. So you need 50K to keep buying no matter how low the price goes. So if you set out of that 100K, you set aside 50K, then you can keep buying all the way down to zero. You can keep buying shares, 10 shares every time the price drops by $1. You can you can keep buying. So 50K you keep aside, you'll never run out of money to keep buying. Right? So let us keep 50K on the side to keep buying and use the remaining 50K to buy shares at $100, right? So whatever money you are left with, out of the 100K, you are left with 50K. You use that 50K to buy shares at the price of $100. So now what will happen is, if you'll end up buying, basically you'll end up buying, with 50K, you'll end up buying about 500 shares. So when the price rises, you will be selling these shares, right? So every time it goes from 100 to 101, you will sell. 101 to 102, you will sell. So basically by 150, you would have sold all your stock, right? So now we have ensured that we will never run out of cash, right? I mean, we have set the bottom. We are making sure that we will always have cash no matter how low the market goes. But we still need to understand how this is a cash printing machine, right? So the question still remains. I keep talking about cash printing machine. How does this strategy become a cash printing machine? So that is the only question left to be answered as to how this whole process becomes a cash printing machine. So now I'm going to walk through some Excel like spreadsheets to basically show you how this becomes a cash printing machine. Right? So I've taken a snapshot of this sheet. So the price is as you can see, the price is fluctuating between 100 and 104. And I've set it up so that, every time the price rises by $1 and, then, goes all the way to 104 and then keeps dropping to 100 again, and then rises to 104 and then drops to 100 again. Right? So in the next sheet, I calculate cash needed. As I showed earlier, the formula for cash needed is basically the price divided by 2 multiplied by price into 10. Right? So because every time you're going to buy 10 shares at the current price, and your average price over the long run is going to be the current price divided by 2. So you use that simple formula. You can now calculate the cash you would need at every price, right? So as you can see, as the price increases, the cash needed increases. As the price drops, the cash needed drops. Everything making sense? I'm sure everything is. Any questions, guys? I guess no questions. Okay, so everything is making sense till now. Okay, so the third step is, now we are going to calculate the share zone, right? So we already decided we are going to sell 10 shares every time the price rises and then buy 10 shares every time the price falls. So as you can see in this chart, basically as the price falls, your number of shares you own will keep increasing. As the price rises, the number of shares you own will keep decreasing, right? So the fluctuation between the number of shares you own is inversely related to the price, right? So next we are going to calculate the cash remaining in the account, right? So every time you buy shares, you're going to spend some cash, and every time you sell shares, you're going to get some cash into your account. So now I'm basically showing a plot of how much cash is remaining in your account as you're going through this process. So, you know,
What's the x-axis in this? The days, is it?
it's the trade number.
What is it?
Trade number. Number of
Okay.
trades. Yeah.
Okay.
Right. So again, we are not related to time at all. Everything is price based. So it's all I'm plotting is the trade number as the x-axis and the price as the y-axis. Right. Price and the cash remaining in the account as the y-axis. Right. So you can already see that the cash remaining in the account is slowly increasing. You know, there's a slight increase if you can see, if you watch closely this chart. So just to highlight that point, I've plotted the cash remaining for about 1800 trades. So as you can see, for 1800 trades, the cash remaining in the account is continuously increasing, right? But you say, well, it drops also. At times it drops, then it rises, it drops, it rises, right? So this is still not a cash printing machine because at times it depletes cash from my account. So what about that, right? So now we come to the next step. We calculate the extra cash. Extra cash is the difference between the cash needed and the cash remaining in the account. So the cash remaining in the account, so all I've taken is the difference between E4 and D4. E4, so column E is the cash remaining and the cash needed is column D4. And as you can see, the difference is a straight line. It is not dropping in any way. It is always rising. So now we have a cash machine. Now the extra cash is continuously increasing. So this is the cash you can walk away with at any time without worrying about what is happening with the portfolio, what is happening with the price, what is happening with the number of stocks you own. So this is my key message, right? Basically, now we have set up a scenario where you can walk away with some extra cash and the whole game can continue forever, right? And at some point, the amount of extra cash you withdraw will become more than the initial, the 100K that you put in. And then you are done, right? I mean, you don't have to care about prices fluctuating up or down. The interesting part about this plot is whether the price drops or rises, your extra cash keeps increasing, which is the magic of the whole process, that no matter whether the price increases or decreases, every trade you will walk away with some cash. Whether you buy or sell, with every trade you will walk away with some cash.
So
Any
Pratik,
thoughts? Yeah.
yeah,
No, yeah,
question. I think the
so
assumption.
how will you walk away with cash when you buy? Sell में तो होगा ही, लेकिन buy में क्यों होगा?
That's what I'm showing, right? Basically, I plotted the cash needed minus cash remaining, and the
Okay.
difference is always increasing. Even when you are buying, the difference is increasing.
Okay. वैसे थोड़ा counter intuitive है, लेकिन हो तो यही रहा है.
That's why it's a fun part, right? Because it's counted. If it was all intuitive, then we don't need to have a meeting, right? So this is the fun part of the process, that even when you buy, you can walk away with every trade. You're walking away with some cash. So
Pratik, the assumption is there an assumption that the fluctuation always will be there, meaning that it will never be a downward slope, continuous downward slope.
So even if it is a downward slope, right? You're walking away with some cash all the time, right?
So that's what I think Gopal and maybe myself also not understanding. So let's say a stock starts with $100, for example, and every day it drops by $1, right? And all the way goes to zero, which is pretty extreme, but it does happen in a time frame, right? So how do you make money in that situation? I think that is kind of the question that Gopal
So
may
the
be asking.
point is, every time if you follow this strategy, every time the price drops, your cash needed reduces with a faster rate than the amount of cash in your account.
No, so let's say you start with 100, I don't know, 1,000 stocks.
Bottom line is, if your stock does not have volatility in it, right? The underlying assumption is you are basically trying. Let me just go. So basically, what you are leveraging on is volatility, right?
Right.
Usually, volatility is looked upon as a negative thing, right? Stock market volatility causes accounts to become dormant once an investment is perceived to be lossy, right? So that's something I talked about in the beginning. Dormancy results in time loss
यही
and time.
volatility में ही पैसा बनता है शायद.
Right. That's the whole point. The point is, here is a method that just focuses on, but the point is the message that if you turn on your TV every morning, it will say market is volatile, so it is very risky, right? But volatility is where the opportunity is, right? So somehow the message that we are being fed from the media is that volatility is where the risk is, but actually the value is in the volatility, right? So, but it's just nobody walks us through as to how to capture that volatility properly, right? So all this method is doing is trying to capture the volatility, right? So, and again, like I said, it's just one method. There are many different variations of this method possible, as long as you can do all the math and figure out how to, firstly, make sure you never run out of cash, and secondly, you make sure that you are always taking some cash away, whether you buy or sell. So, all right, guys, please ask all your questions. We have all the time.
So is there, with your method, do you also suggest what kind of stocks to pick to play in this, right?
Volatile, right? So bottom line is, the more volatile it is, the better it is, right? So I personally like to invest a lot in TECL. I talk about TECL all the time, right? I mean,
Yes, you do.
so yeah. So TECL is basically a technology sector stock, and it's 3 times leverage. So the leverage further increases volatility, right? So because of that, I can capitalize on its volatility. For example, my cash invested in that stock has been like 21,000. My total profit has been at 42,000. I mean, this is just an experimental thing. This is not my entire portfolio. This is the experiments I keep performing with my portfolio. So basically, I've had a 58.1% year over year compounded return on this stock. And basically, even if you run a simulation, 100,000 will end up giving you a profit of 306,000 over 5 years. So it's all about volatility, right? I mean, as long as you can capture volatility, as long as your stock is volatile, you can make money.
So Pratik, your just in your illustration, when you had this 1,800 trades or something, that includes all, even intraday trades, correct? Essentially, you need to keep following the price and keep trading, correct? As it moves up and down, correct?
Definitely, and that's why having some kind of a tool to do it for you is a better idea than you doing it. Yeah.
Okay.
So essentially, this we could with a very volatile stock, we could do this the 1,800 trades even in less than a month or so, correct? Probably around 100 trades a day or something like that, correct?
I doubt that will ever happen. My guess is probably, even if you do 3-4 trades a day, you can see if you can achieve this within a year. Even then it is a good return. You're making your $10,000 that you're walking away with. This is not the cash. This is not the only way your portfolio is increasing in value. This is the cash you're walking away with, right? And definitely, I think even here I've been conservative. Like I guess probably 5 trades a day is easily possible. So
Pratik, one question. What are the scenarios where your method fails?
I'm still looking.
Okay.
Yeah.
Okay, so in the scenarios where it is a straight downward slope, if your method still works, that's what I'm not.
Okay, so the point is, that's why I'm buying ETFs, right? I mean, if you're buying an ETF that is directly going down, then either you've purchased the wrong ETF or you don't understand the markets, right? I mean, the point is, no
Got it.
technology ETF goes down straight down, right? I mean, so the point is, that's where you are protecting yourself against just the CEO died in the company. The CEO died, the whole company is coming down.
Right.
Like
So in other words, you are basically inherently suggesting to look after the ETFs.
right.
Okay. Instead of individual stock picking, take the ETFs and apply this method.
Right.
Okay.
And the point is, individual stocks, you don't know what is going to happen to the company, right? Of course, if a company closes down tomorrow, there is nobody in this world that can protect you
Right.
with any strategy.
Right.
So,
Right. Yeah, makes sense.
mhm.
No, it makes sense. So that's why I think I was missing the point that you are inherently saying that focus on the ETF and apply this method to make money.
Right.
Right.
My
Okay.
main goal is not to keep away from predictions. I don't want to get involved with predictions. I don't want to get involved with charting, fundamental analysis,
Correct.
trying to follow the news, any of that stuff. I want to keep away from all that stuff. Right. So,
Correct.
Yeah.
because
Hmm.
I don't believe there's any information in any of this. Like all, if there was any information, CNBC would be telling you beforehand that today the market is going to rise or today the market is falling.
No, CNBC tells me, but those are the things I have heard.
Right. No, I mean, they tell
Like,
you at the end of the day, this is the reason why the market fell today. This
no,
is
no,
the
no.
reason why the market rose today.
I was joking. Jim Cramer comes on and says things, and I have heard. I do the
Right,
exact opposite thing.
right. Right. I mean, bottom line is we all know that if anybody knew the future,
Yeah,
then they would be God, right?
yeah.
So, but
Yeah.
somehow we are made to
Hmm.
believe that predictive, like, see, that's the funny part. On the one hand, everybody will tell you the market is unpredictable. On the other hand,
Hmm.
they expect you to
Then-
predict it. That's the irony of the whole thing. That on the one hand, you are told that it is unpredictable, but again, you have to predict it to make money. Right? So,
Hmm. Yeah,
Pratik,
yeah.
so I just wanted to check. Just to summarize, basically, this is I mean, you call this a trading strategy, but in reality, this is more of an investing strategy because when you do trading, like you actually have risk management. So in this strategy, there's only accumulating a lower average of the price and then taking profit as the price rises, but there's no real stop loss, right?
So there's a whole bunch of very loaded words you use. So let me just clarify some of the things. Firstly,
Sure.
I'm not. A lot of people like to think of what I'm doing as dollar cost averaging, right? I'm not doing dollar cost averaging. I know that much, right? Because dollar cost averaging does some totally different things. We are not looking at the average price at all. We are not looking at what my average purchase price is. I'm just, if anything, I'm probably doing something called price cost averaging. So I don't want to get confused with all the other jargon that gets thrown around. I just want to be clear that what I'm suggesting is basically build a plan for yourself to buy and sell at every price, and make sure that that plan assures that you will never run out of cash, and then basically make sure that that plan gives you extra cash. Make sure of these three things, then you don't need to use any of the other jargons. For example, like I said right in the beginning, investing means you give money to a business to run their business. That is investing. If I go to my nearby store and nearby restaurant and I give them money to buy 5 more tables, that is investing. But when you are buying stock, you are not investing in anything. The company does not care whether you bought the stock or did not buy the stock. They are not dependent on your money to run their business. They have already made their money by floating their stock in the market. Right? All you are doing, no matter how you like to think about it, all you are doing is trading. You're just buying to sell and selling to buy. So,
Okay, I understand that, but it's still it's still a long term. It's
you
by
can call
default
it
it is
anything you like. You can call it anything you like. You can call it investing. You can call it I'm building my own business. I'm. You can call it anything you like, but just because you call it that, it doesn't become that, right? Investing means you want to invest, you start your own business. That is investing. The guy who invested was the guy who started the company. That is the guy who invested his time and his resources. By buying stock, you're not investing in anything.
okay, and it's this is by default a long only strategy, which is you start with the buying at a certain price and then you are taking profit later. Okay, fine.
Right. It is a long only
And then
strategy. Exactly. Yeah.
and there's no concept of stop loss. So you do have to have an informed market view. And
Right.
I mean, do you are you going to talk about any kind of diversification, or like does that's just up to the
No,
people?
I think I just wanted to. I mean, there's a lot of concepts that go into investing, right? I just wanted to bring out one concept. If I can just bring the focus to one concept, I think this talk is useful for me. I mean, there's 10 different other things that also happen, right? I mean, how do you decide that you're going to invest $100,000 in a stock? Suppose you want to build a portfolio out of 5 stocks. How do you break your by your $100,000 across the 5 stocks? So there's all kinds of complex math available to do all that, right? I mean, people talk about what is that Sharpe ratio. They talk about Markowitz theory and all that. So I mean, people have gotten Nobel prizes on doing all that kind of stuff, right? So that's not the part I'm talking about. I'm just talking about how to make sure that you're creating a cash printing machine. So
Basically, a
Okay.
dummy's guide.
a dummy's guide, yeah, that's the simplest way to put it, I guess.
I'm always simple.
Yeah, yeah. No, I mean, the point is, I just don't like the concept of predicting the market, and that's what I'm trying to steer people away from. So
Yeah, actually, trying to understand too many things is also stressful.
right. That's what.
Tera ye sahi tha. It's nice. Yeah.
So Pratik, when is your app coming out?
Most likely by March or April. So
Okay, cool. Would sign me up for test drive
of
or
course,
beta?
of course, man. Every person is of course they'll be welcome, right? Once there's a company in place, every customer is a welcome entity, right? So
So yeah, in that sense, it will be my investment.
okay. Right. You'll be investing in the company, exactly. I guess you can say that a customer is the one who actually makes an investment, right? So
Yep. Yeah. Yeah. I mean, when you started, you described that your interaction with that Indian guy who tried to sell the stuff for 60,000.
Yeah.
I had similar experience in Singapore, and I actually just a week ago I cautioned Rahul about that. So I had to confess to him that I lost 4,000 Singapore dollar.
Right.
Same situation, exactly same. But okay, the values were a bit less. That's what. But kind of Ponzi scheme, doing.
Right.
And not only that, there is another thing. Let me tell you, you probably didn't face that. That was probably that guy was genuine in the sense he would have sold you something on 6,000. But there are other people also waiting to kind of drag you in Ponzi schemes. So they come to attend to just to do that. I mean, it's very interesting. In Singapore, it's very complicated. That's why I caution Rahul, who is in Singapore.
My personal view is that even Goldman Sachs or E-Trade or any of these companies, they're nothing but Ponzi schemes. Right? I mean, the point is they have absolutely no idea what they're talking about. They have absolutely no idea, but they keep talking every day. Apple, Microsoft, that they understand all these things. They have no understanding of anything. Even Elon Musk says the price is too high. They still keep talking about Tesla. So, point is, nobody knows. Even the owner of the company does not know what is the right price. Right? So.
Yeah. So actually, that's true. So kind of make the most of the present is probably that's what.
Right. I mean, the only information you have is the current price. That's the only information you have. You should be able to take an action based on that. And that's about it.
Yeah.
Pratik, sitting on a board of a company, we talk about the stock price of our own company all the time, right? We have all the information that anyone could possibly have about the prospects of that company. I mean, of course, there are other things that happen that are not within our control.
Right.
But frankly, we can have more information about what's happening in the company.
Right.
And even then, determining what the stock price should be is impossible.
It's
right?
impossible.
Because it's not,
Exactly.
it's not within our control, right? Stock
Right.
prices are determined by the earnings potential, but also how people view that earnings potential, right? And
Exactly.
that view changes based on 10,000 other parameters on which we have no control.
Exactly. Exactly. So the point is, but the media will always tell you, you can learn more, you can understand more, you can study more, you can read more.
I mean, the intrinsic earning potential of a company is something that's sitting on the board. That's something on which we can take a view. And even that, frankly, is dependent upon market conditions on which we don't have any control.
Right.
So, I mean, the idea that anybody knows what the right price of any stock is just a total joke.
Total joke. Exactly. Exactly. But there is opportunity to make money as long as, all I've done is I've said, let me not make any assumptions that I understand anything.
Yeah.
Right. And basically start from there. Nothing is predictable. But only thing I know is that the stock price can never go below zero. Right.
Yeah.
Although we've also seen that happens at times that, we all know the story about oil, where oil had become negative in price and all that stuff.
Oh, yeah.
But even so, let us for a moment assume that the price will never drop below zero for a company. So
yeah, that
I mean,
was.
So, Pratik, have you done any? Sorry, Shashi, go ahead.
No, I'm saying oil can drop below zero because there's a storage cost to oil, right?
Right. Right.
So if there's no one to offtake it, then it can go negative. But stock prices cannot go negative.
Right. So I just wanted to make sure that, I just want to clarify that, I've been careful in thinking about this to know what possibilities exist. So
Yeah.
go ahead. Somebody who was asking a
Yeah,
question before.
have you done any back testing on this model?
Yeah, that's why I showed all those numbers, right?
Numbers.
I showed the simulation results as well as my own trading.
Okay.
I've been using the method for last 5 years. So
Okay. Good. I think I really see value in this, yeah, because especially if volatility is the the underlying assumption and the premises on which we want to do this, correct? I think we can do it. I mean, I don't mind now. Abhi, today, so I think the new this thing has started, correct? Monthly thing is starting Thursday. So next Friday onwards, correct? 29 se kar sakta hu main. I will choose one stock and try to do this.
Just make sure that the volatility meets your requirements, right? I mean,
Yeah, exactly. No, that's what I will look at. That. No, we have. The good thing about the Indian markets now is you get a lot of data, correct? Implied volatility.
See, the
Obviously,
other
the
thing that is
NSE,
happening, the reason I'm
NSE
focusing a
publishes,
little bit on the Indian markets is because Indian market right now is flooded with apps. It's flooded with all kinds of apps. And the funny thing is every app talks about prediction accuracy.
Oh.
Every app, right away, as soon as they say prediction accuracy, I don't look at the app anymore. I know what they're doing. So,
Okay.
so prediction, as soon as you read
No, you
prediction
cannot
accuracy,
predict.
it's time to walk away from it.
Yes.
If somebody can show me how to make money without predictions, then that is interesting. But anything that talks about prediction accuracy,
Bharatan, you give me some time tomorrow, ठीक है? तू study वाडी कर ले, उसके बाद क्या कर?
करूंगा मैं करूंगा एक चीज है प्रतीक one request is if you can send that Excel sheet में values डाल के रखो मैं I can share it.
वो हमको भी थोड़ा भेज देना. वो हम थोड़ा एक after a long time I'll do some Excel, yeah.
See, bottom line is I don't like to hide anything. I don't believe, like, if the only reason I'm building an app is because this thing does get complicated and people need an app to navigate through it, right? I mean, so it is not because I'm trying to hide any intellectual property or I'm trying to say, people should not learn or people should not use whatever I'm building. You are totally free. You ask me any question, I'll answer it openly. So the building of the app has nothing to do with any intellectual property. So you feel free to ask me any questions. I'll answer it. I'll provide you with all the information. Right? The only thing I can't share is the code of the app. It's the only thing I can't share. But everything else is available. So
वो चैट जीपीटी
कोड
को
वगैरह तो
पूछ
बस की
लेंगे.
बात नहीं है.
huh?
Code वगैरह तो बस की बात नहीं है. You share the Excel. So I think what I mean, the guys who are interested, right? Obviously, those who are interested, I think we should take one or two couple of
Yeah,
stocks and then start
Yes,
simulating
yes,
it
definitely.
over a period
Yeah,
and then
yeah.
see you'll get there.
No,
Yeah.
that we owe to Pratik also, and give him the feedback. Yeah, definitely.
Yeah.
I think India,
वो ठीक है.
I think what important thing is you this thing, correct? The threshold, correct? Whether it's $1, I mean, it's 10 rupees or 50 rupees or whatever it is, correct? What is the band you have to look at? That's what you need to kind of zero in on over a period of time, and then I think you'll
Yeah.
be able to get one or two success stories.
Yeah. I mean, the point is there are definitely parameters that you have to play with. And again, that's where the app helps you. It helps you figure out the values of those parameters, right? So, I mean, again, I didn't want to make this, an optimization class. I just wanted to highlight one point, and I think that as long as I can do that successfully, I think this is for me. This whole thing is a success. So. But really appreciate, the amount of participation you guys have shown. I did not expect it this much, because I've been pushing this for a while, and I get a feeling that people say, man, this Pratik Agarwal, he always comes up with this thing. He's always talking about stocks all the time. He wants to sell us something. In fact, Viru cautioned me. He said, hey man, what are you trying to sell to people? I can get you arrested for doing all this. And I was like, man, I'm not trying to sell anything.
Hey, Pratik, thanks so much for doing this. So I think that if you can post the recording, I think you'll get more queries.
Yeah. Now, of course, see, the point is, I have no formal training in finance, but I have no formal training in data science also. And I've been a data scientist for 17 years without any formal training, right? So I don't value formal training too much. As long as you have interest in a topic, I think you should be free to talk about it, right? So I mean, if you find somebody who tells you that, okay, all this is nonsense, all the power to him, right? I mean, so the point is, use everything at your own risk, evaluate everything. I don't take any money from anybody to invest for them, because I expect everybody to learn on their own and do their own investment.
That's true.
That's very fair. Yep.
ऐसे ही सूरत
Go
में
ahead,
तो कुछ करने का नहीं है. सैटरडे संडे तो कुछ करने का नहीं है.
Right. नहीं so basically one idea is to open that office in Gandhinagar. I'm trying to open an office in Gandhinagar. So if you are in Surat, we'll meet in Gujarat sometime. So.
अच्छा. Okay.
So there's that gift city that Modi ji has started, right?
Yes,
so this,
yes.
I want to take advantage of that, basically.
वहाँ पे शायद फ्री में भी मिल जाएगा घर.
Then I will need your contacts. I'll need your contacts to make that happen.
वो शशि का भी है. शशि came to lecture nearby ना.
मेरे को मुफ्त में कुछ नहीं मिलेगा.
Sashi, my son is asking whether you are a relative of H.C. Verma, वो जो physics prof है ना.
No man.
All the Vermas in the world are related.
वो 11th standard पढ़ रहा है, पूरा H.C. Verma और क्या बोलते हैं वो R.D. Sharma में घुमा है.
Yes.
डूबा हुआ है.
Okay.
No physicists anywhere in my family, to be honest.
Okay.
Rahul,
guys.
Any questions? Rahul, any questions?
Rahul, any questions? Yeah, that is most important.
Yeah.
No, I mean, I understand your strategy, and I on the long term, I actually agree with this strategy, because sure, you will have this kind of, COVID downturn, all this kind of thing, but eventually we know, there's growth, markets will go up, and and most people, they just don't know when to buy, when to sell. This is a very good strategy. And in fact, if prices keep going down, then like you mentioned, you can get a lower price cost averaging, as you mentioned, and eventually you will be, and you also know where to take profit. So yeah, I think it's pretty decent system, I would say, if you're trying to buy the index.
Let me end with one sentence. I just want to put in one more sentence. At some point, ECL was up to $85. Today it's around $45, right? my total profit from the account at 45 is more than the profit of the account at 85. So even though the price has dropped, today I have more profit than I had when it was 85. So just want to, just because people say, well, this is all uptrend strategy and this and that, what happens in downturn markets and all that, right? So I'm saying I've come from 85 to 45. The price has come from 85 to 45. Today I have more profit than it was at 85. So just want
Because
to
you have more
clarify that.
buying power. Because you have more buying power.
More buying power, plus I'm trading, right? So you're continuously making cash. So you're taking advantage of that volatility. Yeah.
So Rahul, Kishore, is that your son?
Yeah.
Oh wow,
Yeah.
nice.
He looks much smarter than you, man. What is going on?
Yeah. When was I ever smart? हम तो फ्लोर पे सोने वाला है, पहाड़ पे सोने वाला है.
Right.
I'm street smart.
Yeah, definitely you are street smart. No doubt about that. I mean, much I have to.
एकदम रास्ता smart.
Get to meet you, Rahul.
Yeah, Rahul is also actually trading for his company. I think. Actually,
I think you mentioned that.
Yeah.
For oil, right? He's
Rahul, you
mostly
can say
on oil,
something. Yeah.
Energy.
Yeah. I trade oil. I trade oil products at my company called Mitsui. It's a Japanese trading house.
Nothing to do with me.
Trade
Nothing to do with
professionally,
me. But it just happens to be a Japanese company.
Yeah.
Very nice.
So
Rahul, feel free if you want to exchange any ideas or any thoughts or any questions. Please feel free. Right? So.
Okay. Sure. No. I mean, so far everything is clear and
Because
so far sounds good. I'll message you.
The
if
fact
anything.
is, even I am learning, right? I mean, I'm also finding new things. I'm also discovering new things with the same strategy, and so I mean, I'm always learning from whatever other people are telling me.
So awesome, Pratik. Thank you so much for doing this.
Thanks a lot, guys. Thanks.
Rahul, by the way,
Topo, if you
Shashi was
topo this
also
logic
here.
for fidelity, Pratik को पैसे देना पड़ेगा.
प्रतीक
If he
यहाँ आएगा तो
टोपो ने ये लॉजिक को फिडिलिटी के लिए टोपो मार दिया ना. फिडिलिटी में लगा दिया तो.
Oh, Topo,
I doubt that will happen. All these big companies,
they will not.
They will not do it.
They will not.
They will always say he's not a billionaire yet, so why should we follow his strategy? They only want to listen to Warren Buffett, to guys. They don't care about the small guys like me. So I'm perfect. I'm in a perfect situation. I don't bother about people stealing what I have. I don't think they will ever have the intention to steal whatever I talk about. So,
But what a nice idea.
So Pratik, anytime you are coming like soon to Gujarat or sometime? Tell me.
So I'm trying to set up the office. Most likely I'll be there in November. So
okay. ठीक है, November तो रहेंगे. I'll be there.
So where are you based in US, Pratik? Where are you based in US?
Atlanta.
Atlanta.
Atlanta. So today we have US, UK, Asia,
and India.
Asia. अच्छा, चलो then, right? Thanks.
Okay, cool, awesome. Pratik.
All right, guys.
Thank you.
Thanks a lot. Thanks a lot for showing up.
Thank you.
Hi. Thanks.